I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to make you a little extra money. My job is not just to entertain, it's to educate, it's to teach you. So call me at 1-800-743-CNBC. Tweet me, Jim Cramer. Some stocks should not be downgraded. Sell, sell, sell. It's just not worth it because it's only a matter of time before they snap right back. Yet we see this happen every day, including today. Dow dropped 1 point. S&P gained 0.09%. NASDAQ climbed 0.31%. It amazes me that analysts refuse to learn from the mistakes that some stocks should not be taken off the buy list. Today, Morgan Stanley downgraded the stock of McDonald's, saying it is arguably too expensive and that it will probably not be insulated from some structural pressures on fast food. Now, with the stock at 25 times earnings, consensus estimates too high, Morgan Stanley moved to equal weight or hold. The stock dropped $2.58 or 0.84% on that. Now, it would not have made much of an impact on me if McDonald's hadn't also been downgraded by Loop Capital on Friday, again concerned that it won't beat the consensus numbers. Look, I understand the downgrades. Stock's up 5%. It's holding its own. But I think that in the long run, it has never paid to downgrade Mickey D's. It's the king. It offers good value, and it's incredibly well run. Let's leave Morgan Stanley's valuation downgrade aside for a moment and focus on Loop Capital's Friday downgrade because it's much more visceral. It's observable. You're on it. The main thing Loop cites for what they think will be a shortfall is a negative reaction to the new chicken strips launch. That's right, a dish that's turning off people. The analyst said that he was hoping the new dish would turn things around for McDonald's. But it looks like customers do not like how the strips are made. Customers seem to favor heavily breaded chicken. And the lightly breaded chicken they're serving? No, not buying it. Gets worse. The strips apparently are not attractive. Some would say they're ugly compared to previous McDonald's offerings. And then the coup de grace. McDonald's will soon be offering a snack wrap based on the strips. And while the good news is the strips will cover up how ugly, the wrap will cover up how ugly the strips are. Bad news is that maybe they don't taste good. Well, Loop says that's hardly a reason for optimism, and I understand that. Everything I heard from what they said makes some sense. But we have to wait. The wraps will be rolled out regionally soon, and they're available nationwide on July 10th. Sounds bad, right? That's not what I want to wait for. I say this. I say, wait a second. This is McDonald's. Do you think this company is stupid? Do you think that CEO Chris Kempczinski doesn't pay attention to these things? Do you think he ignores the franchises? Do you think he doesn't know the product's ugly? Do you think that he'll bet everything on a product that people don't like? Listen, McDonald's is an amazing company. It didn't become amazing because it's stuck with bad ideas. I remember going to McDonald's when they released the Arch Deluxe Burger. It was so exciting. I couldn't wait. Yes, it was that big a deal. Came in this plastic thing. It was so I got it. I opened it up. And the lettuce and tomato were wilting. I was bummed. I admit it. But I didn't even want to tell anybody because the hype was so great. I didn't want anyone to think that I didn't like it. I didn't want to say anything to anyone. Well, this was McDonald's. I thought they'd figure it out, but they couldn't. So what'd they do? Did they stick with it? No, man, they killed it. The Arch Deluxe, 1996, biggest launch in years, and they just killed it. Why? Because it wasn't good enough. They knew it was a loser, so they just discontinued. It was plenty embarrassing, but they did it anyway. That's who McDonald's is. I'm sure it was embarrassing when McDonald's fired a CEO for misconduct. They just blew him out. They didn't convene a panel of lawyers and board members to study while the CEO hung on, fighting the inquiry. He was broomed. It was embarrassing when they let go of another CEO because he failed to deliver. But they listened to the franchisees and they fired him. The results each time, the company got better. And that's what happens at great companies like McDonald's. Or how about how they raised the prices? But things got, people said it was too aggressive. They heard a backlash. So what did they do? Simple. They offered a value meal that people loved. It was a great idea, and it is a hit. Every one of these decisions was made without fanfare, but they were done and done with alacrity. That's why I say this chicken strip failure, well, if it doesn't work, it's going to be gone. Hey, by the way, the wrap, too, take that. The strength of McDonald's is that they don't fight battles they can't win. When something doesn't work, they just dump it and they move on. Which is why I say you downgrade a stock like McDonald's at your own peril. Now, it's a big reason why I don't want to bet against Tesla, even after a host of downgrades. We got two of them today. Look, I don't like the spat with the president. Must have entitled to his opinions, but it was a bad call for the shareholders, right? I don't like that cars aren't selling well. I see that, too. I want him to focus on the car, focus on his robots. Blow things away, for heaven's sake. But I don't think he's done. There's another act coming from Musk, and I want to benefit from it. The robotaxi launched in Austin. That's right, Thursday, June 12th. Stock got two downgrades today, and you know what happened? How much did it go down? Was it down 10? Was it down 20? No, let's just check it out for a little cinema verite. The stock was, oh, look at that. It was up $13.44 or 4.55% on 2 downgrades. Yeah, today, in the wake of 2 downgrades, the stock is up $13.44. Hey, finally, there's a stock that people now love to downgrade. It's like, hey, let's go downgrade that. What are you doing tonight? I'm going to go downgrade it. Hey, yeah, I'll downgrade it too. I was going to have a cocktail. Sorry. I'm talking about Apple. I expect to hear some downgrades tomorrow because of today's supposedly ho-hum worldwide developers conference. Not that anyone thought it was going to be anything more than ho-hum, except for some people. As I listened to what they were saying, I didn't get the sense that there was anything truly mouth-watering or earth-shaking from Apple. Nothing that made me wanted to upgrade my phone. But what the critics seem to be missing constantly is that the only question I heard was upgrade or not. Did you hear switch? I didn't hear switch. As long as I didn't hear switch, I'm going to hold on the stock. You may have to take a beating short term when people downgrade, but we're now at the moment when I hear far more negative comments from analysts and hedge fund managers than positive. That means that the downside is most likely more limited than you think. It still can go down. I'm talking about limited. Let's consider a couple of bullet points. First, Apple's in a dry spell. It doesn't have anything new that the people want, but it has plenty of optionality. You know what it should do? It should just go acquire Perplexity. I know they don't like acquisitions. Well, anything can happen. I wish they'd buy it. I hope these guys don't wait until some company offers to pay Apple to be their AI search engine, and it isn't the best. Perplexity is my favorite, and they definitely can afford it. Second, right now, Apple's staring down 2 guns. One, a ruling that declared Google a monopolist that may end its largesse toward Apple, like the $20 billion check it wrote to them in 2022 to be the default search engine. It's also on the verge of losing a key case involving Epic, the gaming company that would let them get around the 30% chunk that Apple takes from every transaction in the App Store. I think Apple could lose one, probably won't lose both. And if it doesn't lose that, whoa! Finally, let's understand something. Apple is not a company that stands still, okay? It knows how to bread the chicken strips. We can sit here and criticize Apple endlessly. They're not perfect. But can we stipulate that in the last year, it's reasonable to believe that Tim Cook, the CEO, might have been a little distracted? Here's a man, a patriot, I might add, who's been trying to do everything he's supposed to do in order to meet the demands of the president of the United States. The president wanted investment in the U.S. What does he do? He announces Apple's going to spend $500 billion in the U.S. over 4 years. No one ever made a bigger commitment. What are the other companies doing besides NVIDIA? The president then made it clear that he didn't want Apple to make as much product as he did in China. So unbelievably, in almost no time flat, Cook moved a huge amount of iPhone production to India. Then Trump says that India's not the right place. The phones have to be made here. I mean, come on. With that pressure, maybe you can see why this may not be the biggest year for Apple. Most managers will be shell-shocked. All that happened here is that the Worldwide Developers Conference was ho-hum. No kidding. I'm glad they had it. As usual, Tim Cook handled all this stuff gracefully without a single complaint. I would say that would be difficult for most of us to do. I don't think we'd be having our most creative year. Do you? So go downgrade. Go put the hate on them. That they don't make enough, they don't put enough bread on the sticks. I don't know. I know that they missed the cycle. I know that the president made their plans untenable, and they might have to eat a giant 25% tariff. But Apple's becoming one of the most hated stocks in the universe. When we get the downgrades tomorrow, many will say sell. I can't blame them. But the bottom line, as long as nobody switches to Android, call me sanguine about Apple. Not more than that, not certainly less than that. Sanguine doesn't mean buy, but it sure doesn't mean sell in tomorrow's buy the holes. I'm not buying those either. Phew. I need to speak to Michael in Florida right now. Michael.
Hey, Jim, thank you for taking my call.
My pleasure.
I just wanted to first let you know that you built my portfolio, and I love it. But I also wanted to thank you for your entertainment value. I have a 6-year-old daughter, and she actually likes watching part of the show with me, where she likes to listen to you go and hit the big board of buttons, as she calls it. And then she asks me for a food or something. She absolutely enjoys it. Thank you so much. It gives me a chance to actually talk to her and, have a young person who's now learning about investment, even though maybe she doesn't know what's going on.
I like that. When we started the show, we had kind of that in mind. I said, look, I want everyone. I didn't think a 6-year-old can look, but I just kind of wanted the family to watch it. But I really wanted was fathers and daughters and to watch together. Or mothers and I wanted all that. But go ahead. Let me help you, Michael. What's up?
Thank you so much. So my question is, ConocoPhillips, I'm thinking about selling some shares, but I'm worried about, I wanted to buy Eli Lilly. Now, you told me to buy it
like your
earlier,
idea. I like your idea. I think Lilly's at a great level, and Conoco is not yielding as all the oils go to like 4 or 5% yield. This is only 3.5. I want you to sell the Conoco and buy the Lilly. I like that idea. And that, ladies and gentlemen, is the conclusion of the breaded chicken strips and... Don't you love that? The breaded... That's how we create a great American company. And they didn't put enough bread on the chicken strip. Next thing you know, they didn't like the dark meat. They didn't like the white meat. I mean, how about hey, How about the neck? I always like the neck. Apple's quickly becoming one of the most hated stocks in the market, but as long as people don't start switching to Android, call me sanguine on Apple, please. Man, but tonight, oh boy, it's so frustrating to watch a company report strong earnings, only for Wall Street to send the stock lower. I'm digging into what happened with Broadcom and why I'm still sticking with it. Then Circle IPOs was far from being square. I'm digging into this red-hot listing, giving you my take on the name. And what should we make of the state of the consumer? Data from 100X found some conflicting data that I think is important for investors to know. I'm getting all the details from the company's CEO. So cancel the chicken wrap and stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.